How to avoid losing $1 million in property investment. I'm Neil Vorster from Organic Growth. I'm a property coach, and I'm here to actually talk to you about investing in property and property coaching in particular. Now, most people when they invest in property, I see the same mistake over and over again. I've said it over and over again that the biggest risk in property investment is the investor himself. What happens is the new investor hears about property investment, reads a book, and decides to have a go. And they end up buying the wrong type of property in the wrong place. They pay the wrong price for it. They then compound the situation by managing it badly because they don't know the first thing about leasing and securing tenants and vetting tenants and so forth. And the net result of all of that is they often lose a lot of money, and then they tell their friends that property investment is bad. And if I had a dime for every story like that, I'd be a lot wealthier. Personally, my story was before I bought my first investment property, I'd been involved as a property investment broker, as an industrial and commercial property broker for about 14 years. So I thought I knew quite a lot about property, but I didn't know much about residential property, so it was a steep learning curve for me. And when I started, there were no property coaches available, and if there were property coaches available, I doubt whether I would have employed their services. And the reason is I didn't understand the value of property coaching then like I do now. I'm going to illustrate this by just drawing on two mistakes that I made, which compounded those two mistakes. It cost me more than R1 million over the last dozen years. The first problem I encountered, which it took me a few years to actually discover that I made this mistake. I was so excited about the deal. I bought a townhouse in a suburb called Radiokorp, which ticked all the boxes. It was the right type of property. It was a townhouse. It was in the northwestern suburbs of Johannesburg. Good area, very easy to rent. I knew the rentals in the area, and the property was priced well, so I bought the property. 2 days later, spurred on by my desire for 30,000 rand, I needed 30,000 rand for something personal, and it wasn't a critical thing, but I just needed it. I sold the property, I flipped it, and I was so excited by my deal because I made 30 grand out of nothing in 2 days. And I thought, this is property investment for me. Well, it dawned on me about 3, 4, 5 years later what a mistake I'd made. And had I had a property coach at the time, he would have told me, you would have seen it straight away. This is the mistake. What I should have done is a property coach would have said to me, Neil, you've got equity in property number 1, 2, or 3 in your portfolio. Go and take a secondary finance on one of those properties. Draw 30,000 rand there and use that for what you need. Your net effect from a cash flow point of view would have been less than 300 rand a month, which is easily covered by this property alone. And I would still have the property today. And now, 12 or 13 years later, that property would have paid itself off. The tenants would have paid it off for me. And I'd be sitting there with a property worth 700,000 rand completely paid off. But instead, I don't have that. I know I have the memory of doing a nice little deal over a weekend. The second mistake I want to talk about is occurred, I think, in the year 2003. I was a commercial property broker at the time, investment broker, and I'd had a bad day in the office. So I took the afternoon off and I decided on some retail therapy. And I went into a suburb called Linden, which I know has a couple of retirement homes, and I'd been eyeing them for a while. And I went shopping, and I found a to-let board, phoned the agent. Half an hour later, the agent was showing me the property, and it seemed like a very good deal. So I bought it there and then. Excuse me. What I didn't think about is that this property was on the first floor. And now I'm talking old age home is on the first floor, and there was no lift. So I'd already cut my field of my prospects in terms of tenants to fit tenants, which I thought not the end of the world. The other problem was there was no parking allocated to this unit. Now, when the developer had developed this property, this retirement home, they had made some fundamental errors, and one of them was they provided too little parking. And mine was one of the units that had no parking at all. It didn't even have an allocated open parking bay or garage. So the seller had said to me, or through the agent, had said to me, that's not a problem. I've got an arrangement with one of the other owners in the complex who's got a spare garage, and I lease the garage from them for a couple hundred rand a month. So this was facilitated for me. So I signed a lease with with the other owner in the complex, and my problem was sorted. I found a tenant, and I was A for away. Very happy with my deal. Now, an experienced property coach would have said to me, Neil, firstly, it's first floor of an old age home, problem, but not insurmountable. The second one is I had a short-term solution to a long-term problem. A property investment is a 20, 30-year commitment, and here I had a lease agreement for parking. Well, what happened is a couple of years later, that owner of the other unit in the retirement home died. And the estate sold the property, and I was left without a garage. The result was I ended up with a vacancy of a few months while I tried to find a tenant who was fit enough to handle the stairs but yet didn't have a car. When I found that tenant, my solution to get out of this bad deal was to sell the property to that tenant after a year or so. And at the time I made, I think, nearly 100,000 Rand on the sale. And so I thought, I got away with it. But actually, looking in hindsight, a property coach would have said to me, Neil, stay away from that deal. Wait for a property on the ground floor in the same complex and one that has a parking bay or a garage. And had I done that, I probably would have spent about 20 or 30,000 Rand more at the time. And I'd be sitting on about 400,000 or 500,000 Rand worth of equity in that property right now. Because I've done the numbers. By now, I'd have 400,000 or 500,000 Rand worth of equity. So just these two decisions I made, which were to flip a property in the weekend for a quick gain, and to buy a property using a short-term solution for a long-term problem. Those two decisions cost me well in excess of R1 million. When I told my wife about this this morning, in fact, she nearly fell off a chair because we chose not to quantify it. We just went ahead with things. So my advice to you is, if you're interested in property investment coaching, at Organic Growth we can help you. Click below for more details, and we hope to help you not make the mistakes that I made. Thank you.